XRP saw its fair share of volatility yesterday with moves to the downside, moves to the upside, and lots of liquidations on that journey. We saw some shorts getting wiped out. We saw some longs getting wiped out. And well, in today's video, we're going to be taking a look at the technical analysis on XRP, where I'll be sharing my short and medium time frame expectations on price action. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe, and let's take a look at what's going on with XRP. So here we have XRP paired up with USDT. We're on the 1 hour Binance chart here, and of course we can see yesterday this move to the upside and then this move to the downside. Now what's really interesting here is that we are tracking a final fifth wave movement for XRP's price action, right, from our low down on Monday the 16th of September, and we haven't quite reached those expectations just yet. I'm going to go ahead and show you where things are kind of looking. We're looking for 61.5 to 62.49 from its current price right now. That's going to be about a 3 to 5% move. Nothing terribly too major. From our lows that we had on the 16th though, this would be a kind of move in and around the 9.8 up to about 11.6. Now that fifth wave movement is tracking a diagonal pattern in my opinion. Okay, we've kind of been through this a couple of times, but it does to me look like it is following a beautiful three-wave pattern ultimately here. Now for this to be kind of something that we need to kind of understand, we will be looking at it through the lens of a 1, 2, 3, 4, 5. Okay, and this can of course be a kind of expanding diagonal. It can be an ending diagonal, which is the one that I think we are probably tracking. So the idea is that we come up into that kind of finishing move. Now with a 5-wave move, specifically a diagonal based pattern, wave 4 is allowed to drop down lower than wave 1. I know that sometimes can trip people up who follow 5-wave patterns, thinking that they have to be very specific rules. There's an impulsive pattern that follows very specific rules. The diagonals do follow some rules, such as wave 4 is not allowed to cross down lower than the origin of wave 3 or the extent of wave 2 down there. So it's not allowed to come down there. It obviously cannot cross the origin of the actual structure beginning either, but it is allowed to intersect with wave 1. Okay, so we have that's work, and typically that's what you would expect to see inside a diagonal pattern, and then you have that kind of final push to the upside there. Under an expanding diagonal, this kind of also comes under the idea of a megaphone pattern. It's easier to kind of draw that on here if we have that kind of idea of expansion. We've actually seen a lot more expanding diagonals recently. Under the expanding diagonal, wave 4 could potentially drop all quite deep into this long low point, and then we get into that kind of final move to the upside, touching into those higher ranges of expectation. Now, obviously, we've been tracking this for a while. And we're kind of moving on quite nicely. We're kind of getting there. It's taken a little bit of time, but progression is being made ultimately. Okay, taking a look at everything that's going on, do we think wave 4 has finished? I do not think wave 4 has finished. I still think that we are going to be coming down again. Taking a look at our momentum indicator here, we can see here that we have pushed up to the overbought range. Last time we were here was on Saturday at the 1600 hours. Saturday at 1600 hours, of course, was this move to the downside that we saw testing out the 200 hourly EMA, and now we're back up there. We have lower highs on the hourly chart now and lower lows. Expect more downside pressure here essentially. So if we do find resistance in this range, historically this is a range that we found a lot of resistance on. We're coming right up into that range. It doesn't necessarily mean terribly too much, but this is between 59.19 and 59.48, and the reason I say it doesn't mean terribly too much is we closed inside this range, so we can argue that this one's actually done. We'll just leave it over there or just delete it off the chart. So for the most part, we've had the break to the upside. We have this correction coming to the downside. Anyone kind of thinking about those long positions that I've been talking about, some huge opportunities. The 200 EMA continues to be our support, so looking good there. But I suspect that actually the volatility that we've seen at the moment, we are actually going to be looking for, unfortunately, a bit more of a break to the downside. This is following, in my opinion, another really interesting structure to the downside. If we go ahead and do our due diligence here, and we throw on our Fibonacci levels, we can see that this has come down typically into that typical range, bounced and then dropped down once again. Now the reason for that would be again another diagonal based pattern that we would have to kind of see going on. Now looking at it, we have this kind of big move coming to the downside. We did fall between 1 and 1.236, bounce up and then drop back down. It's mimicking the idea that there's a 5-wave pattern here. but it's not under an impulsive pattern. Okay, so we have to understand that it's not impulsive, but what it is going on there is a potential diagonal. Now, for us to truly understand what that might mean, we want to measure the first kind of structure here, this little one. And the reason for that is we need to see where our wave 5 sits. And yeah, that's one of what I was expecting to see. Wave 5 is in fact shorter than wave 1. Okay, so wave 3 can't be the shortest wave. Wave 1 would and should typically be the longest under the diagonal pattern that I was thinking, but is not in this particular case here. It's a little bit shorter than wave 3. So the main rules that I was looking for was going to be a contracting diagonal inside here, but it doesn't fit those rules. So this is going to be a very interesting kind of structure where we do have the kind of falling wedge. The falling wedge is a bit of a bullish pattern, but it doesn't follow the diagonal structure pattern. So here would have to be marked up as W, X, Y, X, and Z, even though it didn't reach deeper than 1.236. It's the only other explanation that I can think of at this point of recording as to what's going on inside this pattern. But the move to the upside also finds us coming up into resistance. The resistance which was previously support right inside here. As we can kind of see, this one is at 59.47 to 59.66. So this is where I'm expecting kind of see reversal. We've seen a little bit here at the moment, trying to see whether or not we get confirmed closures lower than the 50 EMA, 50 SMA. And as such, this is where the trading opportunity lies, in my opinion. If we close lower than the 50 EMA, 50 SMA after rejection from this area, we might see a little relief and then another drop. I will be looking for short positions, stop loss higher than that previous swing high that we had there, target out the 200 EMA, 1.5 risk reward ratio. Hypothetically, coming in on these numbers, an entry at around 59.13, stop loss at 59.68, and take profit at 58.29. This is the play that I have in my mind right now, with the kind of testing of the 200 EMA as our support level. And talking about trading, 𝗗𝗀𝗀 has some exclusive bonuses up for grabs for the cheeky crypto community using the link in the description down below. They're basically launching campaign 2.0, whale campaign 2.0, where you could win a Model 3, a Tesla Model 3. Now, there's a few different prizes up for grabs here for new signups who basically are just actively trading. So whatever you are trading right now, just trade it on 𝗗𝗀𝗀 and you're going to be in this campaign. So basically, it starts off with an Apple Watch SE. This is basically for trading volume above 3 million. So obviously with leverage, these numbers are not actually that difficult to hit. With trading volume above 15 million, we're talking about a Herman Miller chair. So if you're someone who sits at a desk all the time, that's a fantastic prize up for grabs there. We've got trading volume over 25 million. You're going to be looking at a Canon EOS R5. We have trading volume above 50 million for a travel fund of $5,000. And if you're into your motorcycles, well, there's a fantastic opportunity here for volume above 100 million, a Kawasaki Ninja 650. And of course, the Model 3 down there for 300 million in volume or more. Now, of course, this is on top of the usual $10,000 deposit and trade rewards. Again, this scales up according to your activity and deposit. So deposit $100 all the way through to $20,000. And of course, there's going to be various different amounts of rewards that you can get on that campaign. So basically, by signing up, using the link in the description down below and depositing and trading, you're going to be eligible for up to the 10,000. And of course, if you're trading actively and you're getting some decent volumes on there, then of course you're going to be in the whale campaign 2.0 as well, with some fantastic deals available. So what are you guys waiting for? Check out the link in the description down below. Sign up to 𝗗𝗀𝗀. It's a KYC free exchange, and basically start bagging yourself some of these fantastic deals. I suspect that that's potentially even going to get lost under the bigger kind of macro picture on this 1 hour time frame, where we still target those higher moves, but I still see this as the potential 3-wave pattern to finish off that structure under the kind of larger idea of a diagonal based pattern like this. So all in all, expect volatility, expect more liquidations on the smaller time frames, pumps and dumps, and expect the unexpected. I've been talking about it for a while, and today is pretty much the same. We are seeing again pushes up. We get this fair value gap that's being filled out. This move to the upside is impulsive but doesn't hold. We break them down. So basically we end up with the idea of a really bigger move going on here, but it hasn't actually held up. Anything kind of lower than this one is going to kind of really break the bull's kind of perspective here, the bullish perspective. So 57.63, anything lower than that's going to really kind of hurt a little bit there. But for the most part, we're not terrible in the way that this is kind of positioning itself, and we are looking for those upward moves. We are still targeting out 61.49 to 62.5 on the hourly chart. Let's go ahead and roll this up into the daily. So on the daily time frame, what's going on? Well, we're testing the trend line that we've been kind of talking about for a while. We are in the bullish pattern. We are looking for this bullish breakout. Some people are looking at an ascending wedge pattern. Again, it's not an ascending wedge pattern as I see it on the daily time frame. But here you can see there's a 30% or 25 to 40% move to the upside on the cards. Right, we're talking about 75 to 85 cents. Some people are trying to also track this as a 5-wave movement to the upside or some kind of 5th wave movement to the upside. None of that is valid either, in my opinion. If we follow the rules of Elliott-Wave theory, this is a very corrective pattern that might have some smaller time frame 5-wave structures going on, like we've been talking about on the hourly chart. But on the daily chart, we're in a very corrective pattern overall, and we are testing this upper trend line at the moment. The expectations, as I've said before, is that we cannot break out just yet. I actually expect us to break on down before breaking on up, even though there's this idea that maybe there's a megaphone pattern or something going on the chart that's going to be indicating a bigger run to the upside. But for the most part, whether you have this idea of a ascending wedge or a megaphone pattern, in all honesty, I see this as a triangular continuation pattern in line with Elliott-Wave theory, also predicting up this move to the upside. But like I said before, looking at our momentum, it doesn't support this idea of 75 to 85 cents. And actually what I'm looking for here is a break to the downside to retest some of the existing lows at around 50 to 52 cents. And if we can't hold that, then I do expect 45 cents well, actually more 46, I'd say. And there's an interesting pocket of support to be found down at that range. So I'm hoping that that's where we have that next kind of move to the downside to finish off the structure, so we can then actually reset all of the momentum and target out 75 to 85 cents. So for the most part, that's kind of what's going on from our momentum. Turn that off, bring on the divergence indicator. Again, we're above the 50 level here, but we are basically just bouncing around this previous area where we've been seeing a lot of rejection. You can kind of see it right inside here. So since pretty much August, this is an area where XRP's price action has come up and found resistance and got rejected. So where it sits right now, today, this is a concern and a concerning range for XRP's relative strength index. There's no divergences with RSI versus price, so we want to be aware of that. But in terms of what we're seeing in terms of the downward trend line, the lower highs on the daily time frame, the relative strength index finding this upper area of resistance, the stochastic RSI also being heavily overbought, not just on the daily but also on the weekly, is indicating that we are probably more than likely going to be looking for moves down, not moves up, not likely to see this breakout happen right away. And what that means isn't necessarily that this is a complete farce and that we're not going to have that breakout. It's that we are going to have an opportunity to get a better entry point where we potentially can see, retesting these lows, maybe this becoming a 45 to 65% move. Okay, so there's bigger kind of potential price swings in the market. So where we sit right now, I think the smarter play is to kind of wait to see whether or not we kind of get confirmed breakdown. You can see there's weakness in this price action right now, a very undecided market. And if we do get confirmed breakdown, then we can go short and target out those lows in here. As such, obviously targeting out 1.5 on the risk reward ratio. And of course, if we can get a confirmed breakout into a higher high, so anything above 63.1 could be the start of that, then we can go long and we can start thinking about that 75 to 85 cent target range and a 1.5 risk reward ratio on that as well. So all in all, a lot to play for, a lot has been up in the air, and a lot is to play for when it comes to XRP's price action. Some huge opportunities in the coming days and weeks, in my opinion. But what do you think about the price action? Where do you think it is heading on the small and medium time frames? Let me know in the comments down below, or join us in our free Discord server. We would love to hear from you. If you found this video useful and informative, smash that like button. If you're new to the channel, subscribe. And if you haven't done so, guys, check out this video over here. It's not one you're going to want to miss.